The bare, dusty, harsh reality that the weather has served Kenya's way has dried up water sources, food reserves, and for many, hope. The impact going forward is expected to spread beyond the far-off areas and onto every Kenyan's pocket and plate.
There is concern about the dry weather conditions in the country, and therefore the vegetables that we just now talked about, the price of that will probably not come down shortly.
The said period is part of a larger picture in which the country's growth is not as colorful.
In 2016, we are still projecting 5.9%. For 2017, at this moment, we are projecting 5.7%, so shaving growth in 2016.
The drought, draining as it is not the greatest risk that Kenya's economy faces, according to the CBK governor.
The most significant one, in my view, still remains the external shocks for many reasons, one of which is we don't have we don't have adequate insurance for them. We've insured ourselves, but we don't have adequate insurance. You understand what I'm saying? The Trump effect, for instance, and so forth.
However, the central bank holds that the country's economy has been resilient, with infrastructure projects already railing in their contribution to the resource pool.
In this 5.5% of GDP, if you didn't have the SGR, it would be down to 4.5.
As investment is sought to spur growth, one of the main aspects is the financing of the same, and to this end, the capped interest rate regime. The dynamics of the new law will see banks have to align themselves further to adapt.
We've actually asked them to provide by April this year their revised business models, which they should have discussed with their boards and indeed their shareholders and all that. And it would be one that would lead to greater resilience of those institutions and indeed, therefore, greater resilience of the financial sector.
Njoroge says that this will help improving transparency and efficiency in the credit market. Dan Mwangi, NTV Business.